Happy Wednesday, everyone. Can't believe it's been a week since the Red Cloud event. We are in the thick of it this time on Wednesday last week. Can't reiterate enough that it was excellent for us because the amount of excellent projects and companies out there, it really got me excited. This entire talk will be about precious metals. Again, we hit a high with gold yesterday, pulled back a bit today. Is there opportunity? Is this the end of the run? No, it's not. I mean, I try to avoid predicting the future too much. But I would say if anyone's wondering if it's too late to get involved, is there anything in the world right now that looks like it's settling down? No. There's a reason for this drive towards precious metals. And we're going to have Andy Sheckman on tomorrow at a special time, live 8 tomorrow morning. Very excited because, I mean, he knows everything that we're going to want to talk about, because also that'll be the last day of the BRICS summit in Russia. Lots to talk about with that as well. We're feeling pumped up. I mean, I watch a lot of other people in the space, a lot of people that have made lots of money in this space, and they're all reiterating the same thing. It's starting to flow down to juniors. It's starting to happen. And right now, the more work you can do to look for quality projects with quality teams, because once again, I can't stress this enough, a great project can be destroyed by a terrible team. That happens all the time. We've seen management that is not effective. So you have to have all of it. You have to have the strong backing and support of those investors and funds that are in a project. A great project with great grades, and then someone spearheading that in a very effective way, getting their message out to the market, letting them know what's happening. And listen, there are a lot of great companies right now. It's very heartening to see. Yes, there's lots of companies struggling, but the ones that are doing well for a reason. And not just the production companies. We've seen some great numbers coming out from production companies. We're going to start seeing that too, their quarterly reports. But lots happening. And, when we talk about, the overall scene of what's happening, we're thrilled with where precious metals are. I mean, when we first started talking to companies and we started this company, I think gold was about 1,100. It was somewhere around 1,100. Silver was probably around $11 as well, maybe 12. Did we see that it would go to this price by this time? No, but we knew it was going up, and we knew it was going to go up to very good highs. Why? Because of the data. And that's what's so interesting about people branching out away from just mainstream narratives and investment bank narratives to look at niche markets and opportunities. And that's the space where we come in, because you get a lot of smart people who are happy to dive into the data and to look at things and kind of paint a picture. And that picture is unraveling the way we all kind of think so far. And there's lots of chaos, regardless of elections or regardless of any of that other stuff. There's going to be a lot more money spent. And at some point, and we're going to get to two graphs here as well that kind of show you in a graph sense of what we're dealing with. There's mixed feelings about what's the future is going to hold. Say, for example, Goldman, they forecast a very modest S&P growth, 3% a year for the next 10 years. That's really brutal. The past decade was 13% for the full decade. Long-term average is 11%. Then they're thinking it's going to be a meager nominal total return of just 3% over the next 10 years. Now, could that happen? Yeah, because could all the AI be priced in? I don't know. I mean, it's still going. It's the big question mark. Like, how effective is it going to be? There's a lot of hype, a lot of BS involved, but that could transform a ton of things. But you have to remember, the way we view this too is that if the mining sector was to go the way we think it's going to go, even if there's a pullback in other sectors and other events, even if it was to go up like 500%, the entire sector, it's so nominal in the scheme of things. It's so small that would only represent because it only represents about 1% to 2% of the global stock market capitalization. That share from 2 to 12% would result in about 10% increase in total stock market value. That it's not major. So could you see a pullback, a challenging economic environment with mining going like gangbusters? Yes. as far as data, you could, no problem. It wouldn't skew the overall returns very well. But because you focused in on this rebuilding, trying to get data centers up, the energy transition, all this is going to be a ton of work, a lot of material, and that has to come from somewhere. And we can see that there's the lines of transportation of goods and services is shifting and changing. And maybe it won't be as pronounced. Maybe things will calm down. It's not happening in the next couple months or 6 months. But we're definitely seeing that there's a reason why the U.S. is building out all the chip infrastructure. They're building out their battery infrastructure. That requires a ton of effort. And it's not like they're midway through it. A lot of this is being passed off to being started next year or the year after. And once again, where are they going to get their supply of all the metals that we need? So our argument is that even if there's a global slowdown, the requirement for all of these metals and mining is going to be massive. It's going to be huge. And that wouldn't affect, like if you're a Goldman, if it went up staggering, we had one of these runs, it wouldn't affect an overall portfolio. If you're in an ETF, a State Street ETF of global markets, it's not going to make that big a difference. If you're in an ETF from Sprott that's focused on uranium, on precious metals, on junior mining, whatever it happens to be, yes, you might have a big upside there. So I wanted to kind of throw that in there because that would be contentious. Because obviously if there's a slowdown, you'd go, well, there's not as much a need for building out the infrastructure. My argument is that really you have a good market right now because of AI. It was a fluke. It wasn't some grand design. And they're relying very heavily on it. It's that wonderful seven, magnificent, wonderful seven that is driving the markets. And yes, other companies have had good earnings the last few earnings cycles. Banking is certainly under pressure. And depending where you are, housing is under pressure, but rates are coming down. So it's good news. But we're taking the long-term approach that it's time. Like we're going to see the run, and most people aren't paying attention. Most people still don't understand how critical mining is, and that message has to come top down, and it's going to take repeated efforts. And that's what our goal is. You don't have to like any of the companies we like. That's fine. I don't mind. But we want you to get excited about the space, to take the time fast to learn as much as you can about it. Go watch everything that Rick Rule's got. Go listen to the deep dive or Soar, whoever you find that you really like. Me, who knows? And absorb as much as you can, because this is going one direction. Even if there's hiccups, and you stand a chance of having significant upside potential. Now, let's pull up two charts here. This one was here, the U.S. It's from the Atlantic, so not necessarily my kind of teacup or tea for reading, but it's a great looking chart. So this gives us a look at U.S. public debt as a percentage of GDP. Now, everyone gets bored with history, but here we go, 1790 to 2011. It's just a good kind of graph to show you what we're like, the spikes, the obvious spikes, the Great Depression, World War II, boom. Then it's, it drops off. You've got the Reagan era, boom. Then we got the Great Recession. So big hits up into 2011, where we see what kind of debt has been issued, what kind of money printing, what the economy looks like. And you'll look at World War II. Yeah, there's a giant spike there, but you have to remember the U.S. rebuilt Europe. That was a heyday for North America and for U.S. markets, because they were the lender. They rebuilt everything. That made them a ton of money. So huge opportunity. You see here, if we kind of slowly slide down here to the Fred, this one isn't quite as colorful, but let's just look. If we narrow down to the right side there, 2011 and above, if you look, you're well over the 100%. Like if you, once again, you go back here, the highest we hit was 112 at World War II. We're up hitting like 130, like and above at one point we spiked. This is astonishing levels of, debt, of money out there. You see it being acknowledged. People aren't panicked. They said we can handle 125. That's definitely manageable. And once again, people have, very opposing viewpoints. Either one, this isn't sustainable, this is a disaster, or that no, if it's leveraged properly, this is a reflection of the amount of derivatives we have, the amount of application and leverage that we can put in the markets. There is a big transition going on. There's all these big factors. Will it pay off? It could. So we could hit this spike, and we could have then that these investments that have been made, and a lot of them are good, strong investments, will flourish and pay off long term. And that's the hope. So some of this infrastructure bill, the CHIPS Act, that will start to really motivate and pump things. And never mind the AI, the dreams of AI, because that also is a huge boost. But we're going to go through a bit of challenge to get through that. But that scares people. So they look to go, I'm concerned what the solution is going to be. Will there be a debasement of the currency further? Will inflation jump back in and skyrocket? What will be the reaction if there's a change in power or whoever takes leadership? What's that going to look like? And of course, the big news, whether one likes it or not, is that we're in the middle of BRICS, their summit. And we saw I think it was yesterday, the U.S. came out with new sanctions for Russia, which once again, I would argue is a bad mistake. There is certainly no love lost from the Democratic Party towards Russia. And I'm not saying you should like Russia or anything, but that might be to their detriment to be chasing after this because it's empowering them. Putin has claimed that in the Jerusalem Post, I think it was yesterday, he made the claim that 90% of, hold on, I'll give you the exact quote. Here we go. Yes, Russian president said 95% of foreign trade now conducted in national currencies. Now, once again, that could be propaganda, but you know that this is happening. This is being developed out. India's put a big pushback saying, like, listen, they're not going to look to go completely de-dollarize. Why would you? I mean, if I was India, I would strengthen relationships with the West. The US dollar is still the king, and it's not going to go away. But even with the debts that it has, people are concerned about making interest payments because that is horrendous right now. This is an ongoing development. I mean, the Russians are buying silver now as well. They've said that this type of currency will be backed in some way by gold. Right now, BRICS has 20% of all of the world's gold as reserves. So once again, you get a bit of a pushback that, yes, we're doing this, but how committed each partner will be, we shall see. But that also, it lets people know that this is happening. But we're going to have Andy on tomorrow, and he's going to let us know all the details. I just want to get us kind of primed for that. And if you've got questions, you can send them in to me so that we can put them towards Andy. And we'll try to answer on the live stream if we see something pop in. We'll keep an eye on that too if we see one while we're talking. But listen, it's everything is set up to continue looking strong in all of mining, but certainly the precious metal space. The producers are doing great. They're looking for a lot of M&A. They're going to be sniffing around at projects at perhaps the mid-tier producers to see whoever has projects that are kind of shelved that could be brought online that are worthwhile at 2,600 gold. There's going to be a lot more action. There's going to be a lot of things happening between now and PDAC that people should be aware of and should start paying attention to on the entire production scale of things. But that also means that there'll be people with projects that are either really stunning, or they're kind of shining out there, that are critical, that are needed, that are going to start getting support here soon as well. And that's what makes this exciting, is because when some of these companies are so undervalued and so unloved for so long, that when it gets re-rated, it's pretty staggering, and it makes sense. I mean, obviously, I mean, it's a hard business to get people excited about. You will know because you've been watching and you listen, and you likely listen to all sorts of other analysts and other people. But we want to get this out to your average person on the street so that they think, if you want to have a solar panel, how much silver is that? If you want to have anything electric, that's coming from right now a battery or some sort of metal as a conductive element. They need to understand the level of mining we're going to require to do. And even if something's down right now, like lithium or nickel, does that mean we're not going to use it ever again? Of course we are. Right now everyone's talking about precious metals because it's in your face, it's news. There's a lot of drama building. There's a lot of politics involved. But arguably, one should be looking at lithium and nickel right now because it's going to come back. Even if you don't like the electrification story, and especially if you don't like being preached to and that being forced into doing things, it's going to happen to some degree or another. And I think if someone could step away from the politics of it and say, is it a bad thing? No. If we could do things cleaner, and that means even with oil and gas, they do a good job. They've been cleaning up, like the U.S. Their emissions have been going down over time because they've been really working hard at getting them down. That message isn't put out there enough, and it needs to be said. It's a good effort, and that they should be there should be some good positive news from that as well, instead of just be no more oil, no more gas. I mean, it's unrealistic. It's not sustainable, and it doesn't make any sense. We need to have energy, and we need to be able to provide cheap energy for developing countries and nations so that they can also escalate their quality of life and enjoy what comes whenever you've got a strong, stable supply of power. Now, we're going to keep this one a bit short today because tomorrow's going to be long. We're going to talk with Andy for as long as we got him. He's a very popular guy, but we're going to talk everything precious metals, every angle we could possibly think of. If you've got an angle you want us to talk about as well, send it to me over at andrew@themarketmindset.ca or DM in X, whatever you like. We will get it in there. But listen, things are looking good in the precious metal space. We're delighted. And the other shout out I want to say is some of the other guests we're going to have on coming up in the future here. We'll have Gwen Preston on soon. We're going to have Morgan Leckstrom talking about some M&As that have been going on that have been pretty shocking and pretty impressive. Also, we're going to have on, I like to give away to people like where we get a lot of our research. There's a wonderful tool. We have no relationship with them, but we're going to be talking with Mining Hub. This is awesome. Even their free version, I encourage anybody, if you want to just get their free version, go look at it. They'll send you a daily email of top grades, top assay results. Even at the end of the week, here are the top performing stocks. It's like a data hub. And you can ask it questions. I mean, I think in their pro version, we'll ask Carl about it, but search by this. It's pretty cool. So we're gonna talk to Carl because we use it. We love it. It's dead simple. I can go look by gold intercept, by silver intercept to see right off the bat. Because sometimes you don't know if there's going to be assays. They might be coming in a week or so. You'll get it right there and then that it's being put out. There it is. You can mark on it or work on it right away. And I mean, we see results that we didn't even know because there's lots of companies, and that'll pop up and you see, holy smokes. For example, I Am Gold hit substantial grade times with. Holy cow, incredible. And it's worth taking a look at. And believe me, for someone who likes data and likes to have all of that in one place, it's a lot of fun. And we want to share with people, hey, listen, it doesn't benefit us, but it's an awesome tool. So whether you're a company, you're an analyst, you're an investor, take a look at it. We're going to have Carl on. And a whole bunch of other guests, and we're going to load that up until Christmas to make sure that we get people feeling comfortable in this space and ready to make some money. All right, guys, enjoy your week. We're halfway through this one. We'll see you tomorrow at 8 a.m. And we're really looking forward to speaking with Andy. It's going to be awesome. Everyone, enjoy the rest of the day.